On interest rate hike, forget about September, as I said. The probability of expectation of September hike is today close to zero. Most people have pushed the expectation to March next year. However, these numbers changes very fast. If you have one good week, 2 weeks of strong data suddenly coming out, expectation change to December. You have prolonged weak data that we've seen, then you will even push even further. In fact, I can tell you, by next year, if the data continues to be very weak, people no longer talk about rate hike, they'll talk about quantitative easing number 4. That's what they start to debate. Should US have the next quantitative easing? They don't even want to talk about rate hike. And this is going to be very data dependent in nature. In reality, if you look at US data, very surprisingly, the employment data remain very, very strong. You look at unemployment figures in US, they come off and they are very, very healthy. What they don't have is actually rise in wages. They can't extract. By right, when you have unemployment data that comes down, you should expect wages to rise. And that's what's missing in the equation. They're not getting a productivity rise, they're not getting wage rise. And if you look at them, translate to retail data, on the retail data, demand side remains extremely soft. And today, with the strength of US dollar, it even further put pressure on US economy. Because 50% of US companies, if you look at S&P, the top 100 stocks, 50% of their earnings derive from outside of US. When you have a very strong dollar, their income from their overseas operations are definitely impacted. The movement of dollar today is not small. This movement that we've seen is a major, major move. And it's finally hitting home. You look at Caterpillar numbers, as they explain to people, they say that our numbers are down. I think if you look at Starbucks figures, eventually it will translate to dollar, they're going to be down. Very simple in Malaysia. You look at all the manufacturing that we have, manufacturing companies, they are saying that we are doing well. Is it because they are selling at the expensive price? No, because they're selling in US dollar. That's simple as that. So this interest rate cycle, this dollar impact, my sense is that eventually the markets will look at it very data dependent, and whether you can continue to see the markets talking about interest rate cuts or a quantitative easing for will be very data dependent. Ask us what do we think? My rough guess is that it's probably, if there's interest rate hike, it's going to be very short-lived. It will not be sustainable. And that eventually they will come back to the reality is that the economic cycle remains soft, remains weak. Institutions, corporations are not investing as much. We have not seen that taking place. I spoke in many conferences and I said, what is a very good economic cycle? What constitutes a productive growth cycle? It's not about government doing pump priming. It's not about government easing liquidity that cause the economic cycle to recover. That's not productive in nature. What productive and sustainability is when private sector takes up the effort to continue to have the belief and confidence to invest, and then when he invests and creates capacity, he hires people. When he hires people, they're not able to hire, they start to raise salary, and when the people feel richer, they start to spend, and that whole cycle builds on itself. And that is a productive cycle. And today we don't see that in the world.